Microsoft stock, ticker symbol MSFT. This stock is up 41% year to date, beating the S&P 500 big time. And yesterday Microsoft presented quarter results where they beat on EPS and revenue. The stock went up to 5%, and as of recording this video the stock is up 2.5%. People love Microsoft stock because of multiple reasons, and one of them being the dividend. And I understand why, with 18 years of dividend increases and a 10% 5-year compound annual growth rate. So could this be the perfect moment to buy MSFT stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does MSFT do? Microsoft develops and licenses consumer and enterprise software. It is known for its Windows operating systems and Office productivity suite. The company is organized into 3 equally sized broad segments: productivity and business processes, intelligence cloud, and more personal computing. If we dive in the earnings report, we see that total revenue was reported at 56 billion, up 13% year over year. And to me, this is really amazing. A company that is this big and still capable of growing double digits is really amazing. Intelligent Cloud, the biggest segment, was up 19%, while the smallest segment, more personal computing, is up only 3%. Gross margin was reported at 40 billion, up 16% year over year, which is very nice. Operating income was reported at 48%, up 5 points year over year. Again, very impressive. EPS is up 27%, and to me this is looking really good. In here we see the Microsoft Cloud revenue. It was slowing down a tiny bit in the past quarters, but Microsoft was able to hit a 24% growth year over year again. To me this looks really good, also the increase in gross margin. And when we check the first segment, we see that total revenue is up 13% year over year, but operating income is up 20% year over year. To me, this looks really good. It means margins are increasing. The second segment, Intelligent Cloud, is up 19% year over year and up 31% in operating income. Again, this means increasing margins. The third and smaller segment, more personal computing, is up only 3%, but operating income is up 23%, again looking really good. And now that we know a little bit more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analysis every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. Microsoft is a 2.5 trillion market cap company. PE ratio is at 32, which could indicate that they are at a premium price right now. Later in this video I will show you my 3 price targets for MSFT stock. So make sure to watch until the end, because PE ratio is only telling a small part of the full story here. Revenue is at 218 billion, and in this graph we see that revenue went up in the long run. Margins are going up and down a bit, but most recently it is increasing again, which is something that I really like. EPS is following the same pattern as the margins and the revenue, nothing really special to add here. Analysis expected in 2023 the EPS will grow at pretty low numbers, but from 2024 up until 2026 it is expected to see 13 to 17% EPS growth. For the revenue it is a pretty similar story, but with slightly lower numbers. To me both metrics look really good. Return on assets is sitting at 13.7%, which is a great number. Return on equity looks very good, and the most important number, return on invested capital, is sitting at 23.6%, which is a great number. But it is slightly lower versus the 5-year average. But to be honest, 23.6% is still a great number. Current ratio is at 1.77, which is looking pretty good. The number itself is decreasing, but it is still in a healthy range. Right now, Microsoft has 84 billion in debt, and I prefer companies that can pay down at least a big chunk of their total debt with the total cash. Microsoft has roughly 144 billion in total cash, so they can pay down all their debt and still have an insane amount of cash left. To me, this looks really good. But still, it is very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up big time in the long run. It is coming down a bit most recently, but nothing that concerns me a lot. Shares outstanding are decreasing, which is something that I really like in general. But of course, with MSFT stock at a premium price, you might wonder if this is the smartest way of returning money to the investor. But when shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 0.91%, which is a decent number. But that is not what this is about. Annual payout is at $3 and payout ratio is at only 26%, and I'm not sure why it is not displayed here. I prefer 50% or lower, so right now they have 74% left in cash to buy back shares, pay down debt, do acquisitions and all other things. The 5-year growth rate is at 10%, which is a great number, and they have 18 consecutive years of dividend increases. But to be honest, I wouldn't mind seeing a higher 5-year growth rate here. And if you take a look at these numbers, the dividends paid since 2012, you see that Microsoft did increase the dividends at double-digit numbers for a long time, which is very nice of course. Payout ratio is a very important metric with dividends. It tells you if the dividends are safe. In here we see that over a longer period of time, payout ratio is decreasing to 26%. Again, looking really good. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to grow at similar growth numbers, which is very nice. And overall these dividends look pretty good to me, but how about the historical returns? I decided to compare Microsoft stock with the overall market, in this case the S&P 500. Next to that I added Oracle stock. On the 5-year chart we see that Microsoft beats the S&P 500 big time. In total, Microsoft returned 236% including dividends, versus the S&P 500 sitting at 74%. Oracle beats the S&P 500 by a significant amount. On the 1-year chart we see that the S&P 500 again was beaten by both Microsoft and Oracle, and again also a significant amount. On the 6-month chart it is looking pretty similar, with again the S&P 500 having the lowest return and Microsoft having the highest return. On the 1-month chart it is again Microsoft that is having the highest return. Both the S&P 500 and Oracle are looking at negative numbers. So bottom line, Microsoft stock beats the S&P 500 in the short run but also in the long run. So could this be the perfect time to buy Microsoft stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 8, 10 and 12%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 35, 36 and 37%. And for the free cash flow margin I'm putting in lower numbers. For the PE ratio and the price of free cash flow I'm putting in 20, 23 and 26. They are capable of growing at a high pace for their size, and they have a big moat in my opinion. So I want to pay a higher multiple here. My desired annual return is 12.5%, since I can get an easy 10% average annual return with owning an ETF. Right now, MSFT stock is at $339. I hit analyze and we see a lot of red numbers. We have a low price target of $175 to $211. We have a mid-price target of $231 to $278, and we have a high price target of $305 to $364. To me, the mid to high price target is the most justified here, indicating that this stock is overvalued right now. There is no denying that Microsoft is a great company. It is with reason that this is my biggest position in my portfolio, but make no mistake, it is a heavy premium right now. Fundamentals look good, they are capable of growing at a high pace, and dividends are great as well. However, the stock price is what holds me back right now. I would love to add more shares, but at lower prices. So for now, I keep waiting until it hits my desired price. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.